In the previous video, we learned how to objectively incorporate wave counts with the DCS. In order to find wave 3s, it is a major prerequisite to successfully find 1-2 setups with 5 and 3 waves respectively. And not only 1-2 setups, but more importantly, scout for a smaller degree 1-2 after a larger degree 1-2. The 1-2-1-2 combo is the key to riding wave 3s, and if mastered in an advanced level, will only lead to consistent profitability in the markets. The first step when scouting for wave 3s is identifying a large degree wave 1. This is what we will call a baseline. At this point, we already know that identifying baselines is as simple as finding a 5-wave move that follows rules presented in wave characterization. The first, third, and fifth wave are all subdivided into its own 5 waves. And remember, in Module 2, we learned that baselines are crucial when projecting the Fib framework and is the main reference of wave 3 targets. It follows, therefore, that in order to find strong and high-performing wave 3s, baselines should also show evidence of volume and breadth to proxy for future participation. This leads to our first principle. The momentum of wave 3s is a function of the momentum of the wave 1 baseline. The higher the baseline, the stronger is the runway for the wave 3. After a baseline has formed, prices now transition into wave 2, and in Bob Prechter's term, will erode majority of the previous run-up. With his inspiration, we will call this part of the 1-2-1-2 setup, this wave 2 formation, as the erosion. An erosion, or the major correction after the wave 1, starts with a bearish divergence in sight at the peak of the baseline. Bearish divergences are events where upper oscillator extremes are printing lower highs while prices are printing higher highs. This is the main signal of demand exhaustion. After divergences take place, prices usually form into a 3-wave corrective structure. This is the body of the erosion. Since this is a 3-wave structure, therefore, we can use the DCS to model this move as it is subdivided into its own A, B, C, or W, X, Y subwaves. This is where the Fib relationships are the most crucial, as it gives us a tool to project the possibilities of the correction before wave 3 starts to commence. The last part of an erosion happens during the presence of a bullish divergence near or at the bottom part of the projected channel. Note that this divergence can be seen on the time frame 1 to 2 degrees lower than the major one. That is, if we are using a daily time frame, then these divergences will mainly show up in the 1-hour chart or the 15-minute chart. This is our main signal that sellers are already exhausted and profit taking is almost over. Although this is evident in most erosions, remember that wave 2, minority of the time, comes in the form of flats rather than zigzags. Therefore, this is only a guideline and not a rule. What will make our analysis more reliable in the future is pairing DCS with Fibonacci retracement levels. Knowing how to use the confluence of these two hand in hand, along with using lower time frame divergences, will greatly help us to map the start of the larger wave 3. After the bullish divergence, prices usually rebound at the bottom part of the correction, and if successful, will move towards a major price pivot. The first objective signal of buying interest and the smaller one of 3, has already taken place is a clear break of our DCS channel through a pronounced E2 move. This is where prices start to transition to wave 3. With that, we will call this phase simply as the transition. Wave 1 of 3 transitions are not that too difficult to identify. We will simply follow the rules presented in wave characterization that applies in motive waves. That is, having a 5-wave move towards the general direction of the trend, where the 1, 3, and 5 are all 5-wave moves themselves, and 3 being an impulse. But if there's anything to consider, we want to prioritize transitions which are inside the range of the baseline. This means the start of the smaller degree wave 1 should be inside the larger degree wave 1. Although there is a possibility that the peak of a transition will exceed the peak of the baseline, that could lead us to the probability that the correction is not yet over, or we are inside a 3-wave corrections instead of a potential wave 3. Therefore, we will focus our attention, our energy, and our trade plans to wave 3s happening inside the range of a bigger wave 3.